The following is an update and technical analysis on Bitcoin, the largest component to the cryptocurrency markets, here off the daily interval, where I had mentioned on the 29th of August 2023, and I had remained critical how pivotal this juncture was based upon this primary reactionary uptrend line off the November 2022 reactionary lows, cuts through a ton of wicks, a lot of reaction right across that sphere, including that crash of the March crash lows, synchronized with the 200-day moving average, the 28,628 price resistance, and then you additionally add your 50-day moving average hovering up above. We ended up spiking it really to the button there. Full reactionary high, reaction zone really across that key inflection point. And here's the update. The entire trade thus far was good from the top of that peak down to the bottom of just coming shy, retesting the 25,208 price support there. And that was good for a 9.7% crash to the downside, where I believe now we are trading amongst right across the 25,926 price resistance. And we're just having some sort of minor reaction there as of now. Looks like a reactionary high right across that sphere. Or yesterday, we were rejected pretty impulsively, having a whipsaw-like reaction, failed that inflection point. And I consider this pretty big resistance, where we had a multitude of reactionary lows really across that sphere throughout that entire few weeks of trading violently sideways, where trading sideways was just a boiling up kettle pot of consolidation in a much larger move and or a key inflection point to watch. I additionally have the 25,208 price support and the 24,757, which is correlated to the BTC weekly to USD. And I believe if that key inflection point goes, then we'll see more than likely a much larger scale of a bigger drop move to the downside if bull traders and or long traders are not able to successfully defend these price support levels. Whereas if bull traders, long traders were to step in very aggressively, again, very aggressive long trade entry here, and they were able to pop that level, you could make the case for a potential near-term divergent low with some positive divergence, R-side divergence, and positive moving average convergence. If we get rejected here and you set some stops below and you add to your key position, then you'll have that nice bearish crossover there on the moving average convergence, only necking you deeper into waters underneath these technical momentum indicator spheres, whereas the oscillator could have a very strong move to the downside, rejecting off of its zero line threshold there as well. And the problem with taking this level out, this much larger weekly interval time frame, is you will then transpire into the threat of a death cross bearish continuation pattern where the 50-day moving average will intersect with the 200-day moving average. And again, that would just spell a much larger move to the downside on a bigger drop, where these negative and bearish divergences had only continued to construct since January at the beginning of the year here on a big multi-time frame scale here off the daily interval. And then additionally, those near-term divergent high, where we caught that short trade setup at the top of that 31,914 price resistance. And it has been nothing but a near-term downtrend since that key inflection point, zooming you out to the weekly interval here on the BTC to USD. We are arriving at a key inflection point off the 24,757 price support, correlating with the 50 weekly moving average. We ended up successfully defending that. Bull traders, long traders successfully defended it, but have only just counteracted, was rejected impulsively off the 382 fibs retracement. And that has been neglected there with correlating with the 200 weekly moving average, call it a dual line of resistance. And if we go on to retest this, then I believe this is the monumental key inflection point, is the reactionary uptrend line off the 2017 lows. That cuts right through the COVID crash, cuts right through Powell's 2022 fastest rate hike in history. And that is going to be a very monumental key inflection point to watch, in my opinion, if and when we go on to retest, where bull traders, long traders need to defend that key inflection point really at all cost to avoid a complete weekly breakdown off that, call it a triple line of inflection points there. Had these very fast hidden negative and bearish divergences amongst all three technical momentum indicators, which I believe is the long-term catalyst to this entire move, where we actually ended up putting a marginal new high with near-term negative and bearish divergences with a complete crossover there on the moving average convergence. And we are starting to test that zero line threshold as of now. And if we take out that zero line threshold correlated with this triple line transitioning point, that's when I believe you'll put in an additional sell signal and you'll have an update and or significant report taking you out to the Bitcoin monthly chart, the largest picture to the time intervals. We are slightly starting to break the 50 monthly moving average hovering up above here. And that is a very key inflection point to watch. Whereas if we take those levels out that I just had showed you there on the near term weekly intervals, we are coming up to test the zero line threshold on the moving average convergence and the oscillator as resistance, whereas the 50-day moving average has now become resistance only to potentially backtest it and then have a much larger drop down to move to the downside on a complete backfill of the 14,199 gap. No, it sounds like a big drop from there. But again, these are your just much larger key inflection points to watch on the longer term, on a longer term time scale, if and when we go on to retest these key moving averages. But again, the moving average here off the 50 monthly moving interval is under threat as of now, and only time will tell whether the threat of trading below and undercutting the moving average could transpire into a larger crash. And I believe the weekly primary uptrend line will not only determine the next trend, but will decipher on what's to come next. Keep you updated if I see any more significance here in the charts.